in conjunction with item 20, so 17 and 20. What's the pleasure of the board on these two items since they're related?
Madam Chair,
Supervisor Miller.
I put this item on the agenda because after driving a county car for about a year and a half before I stopped driving it, left it in my garage for several months and then turned it in, it became clear to me that we shouldn't be using taxpayer monies for cars for supervisors. We have many individuals, I think folks have spoken very eloquently here today about the fact that there are many people in the community who are hurting with the tax increases, and not just locally, but all over the country. And many individuals are, the median wage is $44,000 and our wages are $76,500. And after placing this item on the agenda and reviewing data sheets, it has become really clear to me, looking at those various data sheets, including my own, there are many issues, including a clear error on my submittal last year. It was submitted with 100 miles when in fact it should have been over 4,000 miles, and that has been corrected. A few $100 will be paid to the IRS because that would have been income to me. But what that clarified for me is that these errors do demonstrate the less than robust tracking system we have for these county cars. So not only do we have the opportunity for accidental or whatever the submittals are, incorrect submittals, or possibly individuals doing things purposely. And the IRS rules are very, very strict on these issues. We are not, based upon what I've been reading on the various procedures, we're not following our own procedures. Detailed mileage logs are supposed to be kept for all business use with signatures of approval, which none of these data sheets had, including my own. There was, no signatures on any of them. And some folks say they have no personal or very little personal. I think the IRS, anybody using a county car, that if you're driving that vehicle home, I think the IRS would beg to differ. So I think we really need to look at this policy. And depending on your job, but I don't think anyone in any job could pass the test of driving personal mileage to and from your home that would anyway make you exempt from IRS rules. And that's something I'm very concerned about. I don't know if the IRS grants any exceptions for anyone driving a publicly owned vehicle for their own personal use going to and from work. I don't know if they do grant exemptions, but that's something I think we need to look at that. And with that, I move that we deny future use of Board of Supervisors for county vehicles. And also at the same time, I request that we revamp the tracking system to make sure we're following our own procedures. And I would like to see the county administrator order a full audit and report back to the board the results of that audit, whether individuals really need these vehicles. But that's in my motion, is to move to that the Board of Supervisors deny the use of county-owned vehicles for our use. And also I request that, I move that we conduct a full audit and report back to the board in the third meeting in January, and I don't know the date specific on that.
Motion fails for lack of a second. I would note we'll move to item 20 now. I think that report that Supervisor Miller requested has Mr. Huckleberry has provided the board with. I would agree with Supervisor Miller that we probably do need to revamp or we need to look at the reporting requirements. Mr. Huckleberry on item 20.
Madam Chair and members of the board, I provided you with a memorandum dated October the 13th. And really what the initial discussion was with regard to the take-home vehicles of County Board of Supervisor members. And so that's why the first part of this memo talks about what the savings would be, in fact, if we were to eliminate the vehicles by each supervisor's office. And I think that it really looks at about $1,000. So and we talk about the order of magnitude associated with the fleet services cost. It's not that significant, but it's really up to the board whether you want to do that or not. With regard to county take-home vehicles, we've actually reduced the number of vehicles over the last few years fairly significantly, mostly because of the economic conditions associated with the recession. And the number of vehicles that we take home now are probably significantly lower than we used to in the aggregate in the fleet. The biggest number of vehicles that are taken home are basically law enforcement vehicles. And I've said before, we've done numerous studies with regard to whether or not that would be appropriately cost-effective and what on balance is the approach. And that's where you could probably save about $300,000 or $400,000 a year if that were eliminated. But I have consistently recommended that not be done, simply because we have those particular law enforcement units deployed throughout the community. They can respond quickly. They don't spend as much time traveling back and forth from a central station, such that occurs in the city of Tucson. And the fact that they're in a community, they in fact provide some level of deterrence with regard to crime. Therefore, I've always continued to recommend that those law enforcement vehicles continue to be taken home. So I think we've also surveyed the other 15 counties, and it's really a mixed bag. I think we have 4 or 5 counties that don't have take-home vehicles. We have 5 or 6 that do, and we have other counties who just simply said they didn't respond. And so we've got about 4 or 5 counties that didn't even respond to our request for a survey. So it's really all over the board. Eliminating the board's take-home vehicles will not save a great deal of money because the money is invested in the capital cost of purchasing the vehicle. And so if we had a vehicle and you didn't take it home, you'd set it here in the garage, and then you'd come in and you'd use your vehicle, or the vehicle, the county vehicle typically, to do all your other business during the day. You park it back in the county garage and go home. So that's the savings. And that's typically the definition of personal mileage. We do have a difference with regard to how we report a benefit with regard to income, and that's the IRS, and that's really the self-certification form that we have that everyone fills out. And that's every employee who actually takes a county vehicle home. They have to do the same thing. We can cross-check that by typically their location, where they live in the community, their place of reports to work, and knowing the number of days they work and vacation. You can usually get a pretty good answer. The other form that we require is one that where we financially reimburse the employee for the use of their personal vehicle. That gets reimbursed, I think, at about 46 cents or something like that per mile. And their employees are required to have the log, to log the mileage in and out for each personal use, and then a supervisor is required to certify that before a payment is made to an employee for the personal use of their vehicle. So that's what we found in our report.
Madam Chair, let Mr. Huckleberry conclude.
I thought he was done, sorry. I've researched this and pulled up our own procedures, and for both types of methodologies, the IRS requires a mileage log for all business use with detailed report of where you went, why you went, what the purpose was, the amount of miles, and that is in our own policy and procedure. It's been there for a long time. I think that's something that I think we need to comply with IRS rules, and I don't know if the county attorney understands whether we're in compliance with the IRS rules, but it's in our own policies and procedures for both methodologies, all methodologies, that we need to be tracking that. And I noted that I don't think anyone's doing that here. And the other thing is, you talked about the fact that the supervisors would be leaving their car here. Maybe if we never purchased those vehicles and we had just a motor pool, if we had to do long distance driving and chose to use a county car for Phoenix, I think that could save considerable money. And I think that what you see is a lot of people that don't do a whole lot of mileage other than driving back and forth to work. And I don't even turn in mileage reports anymore because I'm out in the community all the time in my district, and I assume all of you are. And so and when I started to do it, it's like $25 a month, and it isn't even worth submitting the paperwork, so I just do my business as I'm out in the community and make sure that I'm doing it that way. I know it is a choice that everyone has, but our own policy says we're supposed to be keeping detailed mileage logs, and I don't think anyone is doing that. I've asked a lot of folks, and I didn't see it in any of the background materials that were provided, and those are IRS rules, and I'm just really concerned that we are out of compliance with IRS rules. So that's why I asked for the audit and the report back so that we can make sure that we are in compliance for the folks that do take those home. The last question or the last point I'd like to make is that law enforcement wasn't even in this consideration when we talked about this originally. I think we all understand law enforcement is a different group than just the county supervisors or employees that have vehicles. I'm not saying that there should be no employees with vehicles. Obviously, there is a necessity for some. One of the ones that jumped out at me was the wastewater department with 35 take-home vehicles. That was a question because I believe they have folks there 24/7 working, and I don't know if that's been examined, that if you have a response to that, I would appreciate that. Thank you.
Yes, Madam Chair and Supervisor Miller, 32 vehicles are listed as take-home and wastewater. Because of the 24/7 shift, only about 15 are ever taken home on any given day.
Thank you. So, Mr. Hugberry, as I understand it, you're recommending no modification to vehicle take-home policy, and you are recommending that the county notify in writing all individuals who report personal mileage to ensure they understand personal mileage and must be accurately reported, and the failure to do so could result in IRS fines and penalties for underreporting county-provided benefits. That's your recommendation?
Madam Chair, yes, that's our recommendation, and we will ask the IRS the type of standard they want reported with regard to reporting a benefit as opposed to receiving a payment which goes to
different.
income.
All right, that's the county administrator's recommendations. Is there any further discussion? What's the pleasure of the board on item 20?
Well, Madam Chair, I think we should move forward with the county administrator's recommendation so that we take a look at what IRS actually says about this type of benefit, so that we're able to resolve those questions in the public's mind. And I think that accuracy is important, and I applaud Supervisor Miller for recognizing any errors that she might have made, and I think that's good. And so with that, I make that my motion.
You're moving the county attorney or county administrator's recommendations. There a second?
Second.
Motion and a second. Any further discussion? Objections?
Madam Chair, I object.
One objection. Any further objection? Hearing none, motion carries. Moving on.